Hey, what's up, everybody? Welcome to episode number 57 here on season 1. Today, I am talking about what does the crash look like for 2018. So, just to give you a little background for those of you guys who are like, what the heck, we're going to have a crash, or we're going to have a correction at least, or another recession or whatever. What that looks like is the market always corrects itself every 8 to 10 years, and the correction we had in 2008, so it would put us 2016, 2017, 2018. So we're going to at least have it by 2018. I would say it might, because of whatever role we might be able to delay it, because whatever will put more money into the economy, but it will probably be 2018, 2019, or even late 2017. So I just want to give you my thoughts and opinions on what I think the crash is going to look like and how it's going to start out and all that kind of stuff. You can take it or leave it. All these, all the facts that I'm going to give you, I'll have links in the description. You can go there and read the article yourself. However, I've kind of just put a whole bunch of facts together and grabbed it a little bit here and there, and I hope that it explains a lot about the 2018 crash. So, anyways, let's go ahead and dive into it. So, first of all, what has already started is the mass closing of retail stores, the mass closing of brick and mortar mall stores, like Macy's. Hang on one second. The fan was on. So we're gonna have the mass closing of brick and mortar stores, which will be like, we'll see Macy's, JCPenney. Let me just go ahead and read. So one article I was reading said that there's 3,500 stores that are expected to close over the next couple months. That includes JCPenney, Macy's, Sears, Kmart, which are actually the same company, Crocs, BCBG, Abercrombie and Fitch, Guess, and BB, or Bebe, I don't know how you pronounce it, is actually closing all their stores and just trying to go solely online to sell online. So what's going to happen? The reason why I believe that this is going to be the chain reaction. This is going to cause a chain reaction because the majority of employees in retail stores are millennials, which is the ages of, like, I don't know. Right now it's probably 30 to, or like 35 to 18 to 35 right now or something. So anyways, a real quick side note, malls, because of the mass closing of the retail stores, malls will have to shut their doors because they will not be able to operate. They will not be able to pay their operating costs or their rent that they're paying the bank, and so you're going to see foreclosures on the malls, or malls shutting their doors and going out of business, and that companies that make their money off of ad revenue, like Google, Facebook, Bing, I don't know, there's tons of apps that also make money off of ad revenue. There's tons of people on YouTube, even I do, make money off of ad revenue on Facebook. These companies are going to start hurting because the companies that were advertising with them, like with brick and mortar stores, are no longer going to be able to advertise with them because they're no longer going to be there. So we're going to see those companies start to hurt. I would expect to see like Facebook and Google start to try to get into other areas. Like I think Google now is trying to get into the phone business and other things like that. So look for Facebook and Google to diversify and start going into other areas besides just generating money from ad revenue. Whew. But yeah, like I said, the smaller people are going to have to shut their doors. So, we're going to see so because of the mass closing of retail stores, we're going to see a huge layoff of millennials. 39% of employees by retail stores are millennials. That's 32.5 million millennials that will be laid off because of the retail store industry. I don't, that's like all of the employees. I think it will be about half or whatever, but I think that's still a big enough number that it will cause a critical reaction or chain reaction that will cause a critical mass. So, 32.5 million will be ripped out of the market. Huge. We're going to have a huge default on student loan debt. 42 to 68% of all millennials have student loan debt. So that's one article I was reading said that 42% say that they either have student loan debt or they know someone in their household has student loan debt. Then the other one says, the other article that I was reading said 68% of millennials say that they have over $10,000 in student loan debt. So that's like 2 out of every 3 have $10,000 in student loan debt. Let's see right here. Which because of the inability for millennials to pay off the student loan debt because they no longer have a job, the banks are going to start to struggle because there's going to be a huge default. Yeah, you can't go bankrupt on those loans, but if you can't pay them, what are you supposed to do? Like, I don't know. So this will lead to struggling banks. Also, we'll see a default on a huge default on car loans. We'll see a mass closure of car dealerships because it's a fragile market already. But for those of you guys who don't know, 18 to 34, the ages 18 to 34, makes up about 35% of the loans that came from 2015. So that's 35%. So if you figure you cut that in half, that means about 16% of those millennials that have car loans are working retail jobs. We're also going to see unpayable rent, because millennials make up 71%. And this was in 2014. I assume it's probably more. 71.6% of millennials rent, and it would be. So you got 59.5 million millennials that are paying rent. So you're going to see an inability for about half of those millennials to pay rent. And if you guys are like, how big is the millennial generation? It's 8.1 million. It's the nation's largest population. So because of the mass foreclosure, or because of the inability to pay rent on properties, we're going to see a mass foreclosure on multiple family housing, single family housing, and rental properties like apartment buildings and that kind of stuff. Because honestly, millennials are going to be like, we can't pay it. Like, we just don't have a job and we can't pay it. And because they don't have a job, they can't put more money into the economy to consume more out of retail and all that kind of stuff. So they're really going to be scraping by just to like put a roof over their head, pay off the car loan, pay off their student debt. And if they don't get a job, they just can't pay it. Which will lead to more banks continuing to close their doors. And pretty much that's how I see the crash happening. That's all my expertise right there. Please let me know what you guys think in the description. If you guys think I'm right, if you think that there's some areas where I'm wrong, I would love to have a discussion about it. And if you guys have any questions about the crash, feel free to post them down below and I will get them on the next episode. For next week, I plan on diving into how can you protect yourself from a 2018 crash. So what kind of stocks, bonds, gold, silver, cryptocurrency, what should you be buying that'll help hedge against the 2018 crash? So anyways, let's go ahead and dive into on a different note. Wow, that was really actually sad. That means I might be jobless. Anyways, let's go ahead and dive into the question of the day. The question of the day is, what is one thing you hate about your best friend? Well, my best friend is my wife, and she does watch the show, but one thing that I hate about her, I don't really hate a lot about her, but she is more of a morning person and I'm more of a late night person. I become more of a morning person because of the stock market, but I like to stay up late at night, and I wish that she would like to stay up late at night as well. So I guess that's one thing that I don't like about her, but overall, great person, absolutely love her. Best wife I could ever ask for. Anyways, if you guys have an answer to that question, post it down below. If you guys have any questions for future episodes about the 2018 crash, post them down below as well. And until next time, don't forget to subscribe up here. Check out what is dollar cost averaging. And then check out this other video right here. And until next time, thank you for watching. I really appreciate it.